Hello everyone and welcome back to my channel. In the last session we have seen the management of working capital, the theory part and also the formula for computing working capital. If you have not watched my first video on that, please do check that out and come back to the session because today's class will be a continuation of the previous one. So in today's session we are going to discuss about operating cycle conversion period. So the thing that you should note here is that conversion period can be calculated on the basis of days, weeks or even in months. Here also we have gross operating cycle period and net operating cycle period. For the gross operating cycle period is given by raw materials conversion period plus work in progress conversion period plus finished goods conversion period plus receivables conversion period. So this forms the current asset part. Alright, this forms the current asset part. And in the last class I have already told you that gross working capital is given by taking the total of current assets. So that is what I have taken here, provided it is given in days, weeks or in months. So that is the difference. In working capital, if you are fighting out working capital, that will be given in amount, and when you're calculating conversion period, that will be given in days, months or even in weeks. So that is the only difference here. Then coming to net operating cycle, you have to deduct payables deferral period from the gross operating cycle period. First you have to calculate gross operating cycle period and you have to deduct payables deferral period. That is your the period taken by the company or the business to pay off all its current liabilities such as creditors, outstanding expenses and wages, etc. So that forms the payables deferral period. Nothing but the current liabilities. So that will give you the net operating cycle period. Now let us do a problem with relation to operating cycle conversion period. Here is the question so that we are going to discuss. Compute operating cycle in days. Period covered 365 days. Average period of credit allowed 16 days. Average total of debtors. All these amounts are given in thousands. It is rupees 480. Raw materials consumption 4400. Total production cost 10,000. Total cost of goods sold 10,500. Sales 16,000. Value of average stock maintained. Raw materials 320. Work in progress 350. Finished goods 260. So these are the informations that are available to us. So here we are asked to compute operating cycle in days. That means we have to multiply the items with 365 days. Here in the question it is already given 365. Even though if it was not given also, we would have multiplied it with 365 days. Alright. Now we have to compute the net operating cycle conversion period. For that we have to first calculate gross operating cycle conversion period. So the formula is given: raw materials conversion period plus work in progress conversion period plus finished goods conversion period plus receivables conversion period. So we have to find out the value of each item in terms of days. Alright, so let us start off with raw materials conversion period. Alright, so RMCP is given by average stock of raw materials divided by raw materials consumption into 365. Alright, so this is how you will calculate value of conversion period of raw materials. So average stock of raw materials is already given here. It is 320. It's already given in the question as 320. So let us substitute the value. 320 divided by raw materials consumption is also given. Here it is 4400. Alright, 4400. That into 365. If you do that, you will get 26.5 days. So that may be rounded to 27 days. Alright. So that is 27 days. So now we can write 27 days against Raw materials consumption period 27 days. Now the next step is to calculate work in progress conversion period. So that is given by average work in progress divided by total cost of production. Cost of production into 365. So you get average work in progress value is 350. It is already given in the question, 350. That divided by total cost of production. Total cost of production is same as production cost, which is 10,000. So you will get 10,000 into 365. How much days you will get? 12.77 days, which may be rounded to 13 days. 13 days. So you got the value of work in progress conversion period to be 13 days. So I am substituting it here. 13 days. 13 days. Alright. Now the next item is finished goods conversion period. Finished goods conversion period is given by average value of finished goods divided by total cost of goods sold. Cost of goods sold into 365. So average value of finished goods is 260. So 260 divided by total cost of goods sold is 10,500. So you will divide 10,500 into 365. Okay. So what is the value you are getting? You will get 9.3 days, which may be rounded as 9 days. Alright, 9 days. So the value of finished goods conversion period is 9 days. 9 days. Now the last one to calculate is receivables conversion period. Receivables conversion period is given by average value of debtors. Average value of debtors divided by net credit sale. Credit sale into 365. Here we are given with the value of debtors to be 480. 480 and the given amount of sale is 16,000. Here it is not mentioned whether it is credit sale or cash sale, but we assume it to be credit sale, and so we are taking whole amount of 16,000. So divided by 16,000 into 365. Here why are we multiplying it with 365? This is because we have to calculate conversion period in terms of days. If it was in terms of months, you will multiply it with 12, and if you were to calculate conversion period in terms of weeks, you will multiply it by 52 weeks. Alright, in a year we have 52 weeks, so we will multiply it with 52. So that's it. Now the conversion period of receivables will be, you'll get 10.95 days, or you may round it off to 11 days. Alright, so this is the value of this is the conversion period of receivables, that is your debtors. So you got 11 days. 11 days. Now what is the gross operating cycle? If you add up all these, you will get the gross operating cycle, which is 60 days. 60 days is your gross operating cycle. Conversion period, alright, conversion period. So now you have to find out the net operating cycle conversion period, for which you require credit allowed to you by the creditors or suppliers. That is already given in the question. It is 16 days. 16 days. So that is the payable deferral period. Okay. Now less, you have to subtract what? Average period of credit. Average period of credit allowed. It is allowed by whom? Your creditors. By creditors, or you can say it suppliers. Suppliers. So it is 16 days. 16 days. So when you subtract that, how much you will get? 44 days. So the operating cycle conversion period is 44 days. So once if you have purchased the raw materials, once you got into the operating cycle period, then it takes about 44 days to convert the raw materials and everything into cash. So this is how you will calculate the conversion period in terms of days. If you're asked to calculate conversion period in terms of months or in weeks, you just have to change that 365 with 12 months or with 52 weeks. That's the only difference. So I hope you all understood this problem. In the next session, we will see the methods of calculating working capital. Thank you.